Okay guys, so in this video I want to show you how to prepare income statement under periodic inventory system. Okay, let's look at the first required under this question. They said we have to prepare the statement of profit or loss and other comprehensive income of Amaswidi traders for the year ended 28 February 2019. So it's 24 marks. Then question 2.2, they said we have to prepare the current liability section of the statement of financial position of Amaswidi traders as at 28 February 2019. Then it's only 6 marks. Okay, let's start with the issue of income statement. Okay, the information that we have been given, they said the following information related to Amaswidi traders at the end of the current financial year. Then Amaswidi traders uses a periodic inventory system to track their inventory and is not registered for VAT vendor, and you have to ignore VAT, which means that in this case you don't have to calculate a VAT amount. You have to ignore the effect of VAT. Okay, so we identify that this company is using a periodic inventory system. You have to know that under a periodic inventory system, you are not going to be given a cost of sales, which means that you have to calculate it using the formula, which we are going to do when we do this question. However, if they ask you to prepare income statement under a perpetual inventory system, which means that the amount of cost of sales, it will be given. Why? Because perpetual inventory system is automatically calculate the cost of sales using the system. Okay, then let's look at the information that we have. Then we have a pre-adjustment trial balance as at the 28 February 2019. Then we have a statement of financial position section. So most of those balances is the one that we are going to use when we prepare a balance sheet section. Okay, then we also have a nominal account section. So this is the balance that we are going to use when we prepare our income statement. Okay, then we have a sales, purchases, salaries and wages, sales return, purchase return, carriage on purchase, carriage on sales, and rent expense. If you check on this information that I have go through, you will notice that we don't have the amount of cost of sales. Why? Because we are using a periodic inventory system, which we have to use the formula to calculate the cost of sale. Okay, then let's look at the adjustment as at 28 February 2019. Okay, let's just go through the first adjustment that we had. Okay, then they said a fiscal stock take revealed that inventory on hand amounted to 75,000. So this is the closing inventory that we left with at the end of our period. So our period is ending 28 February 2019, which means it started March 2018, last year. Okay, let's start with our income statement. The first amount, of course, we have to take amount of cost of sales. Okay, cost of sales, we have 957,000. Okay, we're going to open the bracket and say 957,000. Then we check if we have any return that we have to deduct. Okay, if you check on the information, we have a sales return of 37,000. Okay, which means that in our calculation we are going to say 957,000 minus 37,000. Okay, we have to go back to the brackets. Okay, and say minus 37,000, which is going to give us amount of 920,000. Okay, then now let's go to the cost of sales. We already identified that in this case we don't have any cost of sales. Okay, which means that now we have to use the formula that apply under periodic inventory system. Okay, the formula say we first have to take the opening balance of inventory plus purchase, then we subtract any return, then we also have to add a carriage on purchase, then we subtract the amount of inventory at the end. Okay, let's start with the opening balance, which is 64,000 under statement of financial position. Okay, we have 64,000, which we have to add with purchase of 512. Okay, we're gonna open the brackets and say 54,000. Okay, let's check. Okay, it's 64,000 plus 512,000. Okay, it's not 54, it's 64 plus purchases of 512,000. Then we check if we have any carriage on purchase and return. Yes, we have a purchase return of 42,000, which we have to subtract because we return this inventory to the suppliers. Okay, and we have carriage on purchase of 25,000. So a return, we are going to subtract it. Carriage on purchase is a transport on purchase, which we have to add it under purchases. Okay, we're gonna say plus 25,000 minus 42,000. Okay, it's a plus, let me confirm, 25,000 and minus 42,000. 25,000 minus 42,000. Okay, lastly we have to deduct the amount of inventory at the end of the year, which in this case we identify that is 75,000. Okay, we have to say minus 75,000. Okay, then we close the bracket. So you have to make sure that you show all this calculation because you are going to earn a max. Okay, let's proceed. Let's get the total first. For cost of sales, 64,000 plus 512,000 plus 25,000 minus 42,000 minus 75,000. So it give me, okay, it's 512,000. Okay, it's give me 484,000. Okay, then from there we can be able to identify our gross profit. Under a gross profit, we have to say a cost, sales minus cost of sales, 920 minus 484,000, which is going to give us 436,000. Our gross profit will be 436,000. Okay, now let's proceed. This is how you should calculate the cost of sales under periodic inventory system. Okay, then let's proceed from our nominal account section. This is where we're gonna get most of the balances that we have to adjust under income statement. Okay, then we have a purchase return, we adjust this one. Carriage on purchase, we adjust it. Then we have a carriage on sales. A carriage on sales is an expense. In other words, this is the transport that we paid when we deliver to our customer. So we paid the expense for transport, which is 14,000. Okay, it's gonna fall under expenses. Okay, we have a carriage on sales. Okay, I'm just gonna write this side is how much is 14,000. A 14,000. Okay, remember you have to write on your left side, but I'm having a problem with this cell phone that I'm using. Okay, then let's proceed to the next one. Then we also have a rent expense. Rent expense, of course, will fall under expenses, which is 30,000. We have rent expense. Okay, then the amount is 33,000. Okay, then let's move to the next one. Then we also have a telephone. A telephone we have amount of 18,000. If we find that we have any adjustment, which means that we're gonna open a bracket. We have telephone of 18,000 and water electricity of 40,000. Okay, let's start with a telephone. Telephone, we find that is 18,000. 18,000. Then we also have water and electricity, which is 40,000. Okay. Okay, this one is 40,000. Okay, let's proceed. Now we have to go to our additional information. They said, number one, they said the fiscal stock take revealed that the inventory on hand amounted to 75,000. So we adjusted this transaction when we do a cost of sales. Then number two, they said a loan of our bank is interest free and the total capital amount of loan will be repaid in full on 1 September 2019. So in this case, we find that the interest is free. In other words, this loan that we take from our bank, we are not going to pay any interest, which means that when we go to interest expense, we are going to put 0. You have to write interest expense and then on the answer you put 0 to show that this is free interest, because there's a mark for writing the word interest expense and a mark to show that it's 0. Okay, then number 3, they said rent of 5,000 has already been paid for March 2019. So in other words, in this case, we found that a rent of 5,000 is already been paid for March. And if you check, our financial period is ending February, which means that a rent has been paid in advance. So what do we do when we go to income statement? We have to deduct that amount so that we're left with only amount until February, which means that the 5,000 for March, we have to subtract it under a rent. Okay, which means that a rent must go back now, because we are going to open the brackets. Then we said minus 5,000. Okay, which now in total is going to give us, okay, let me calculate and confirm, minus 5,000 is 28,000. Okay, let's move to the next transaction. Okay, they said an amount of 51,000 must be provided for depreciation on equipment. So they said equipment has depreciated 51,000. So in this case, they already calculated depreciation for us. Okay, we know that depreciation is an expense, which means that we must record it under expenses. Okay, depreciation. Okay, then the amount is 51,000. Simple as that. Okay, now let's move on to the next one. They said it was realized that repair to equipment for 3,000 made during the year had been debited to telephone account. So in this case, we have to do a correction of error. Why? Because the amount of 3,000 is belong to a repairs, and that amount, they're saying that it has been recorded to telephone account, which means that we have to subtract it under telephone and add it to a repairs. Okay, let's check the telephone amount. We have 18,000. We have to deduct the amount of 3,000 amount of 3,000, then we left with 15,000. Okay, they say this amount belong to, they say the amount belong to a repairs or of equipment, which means that, okay, we have to record the amount of 3,000 into repairs account. If you check from the account that we have under expense, we don't have repairs, which means that we have to create one. Repairs. Then the amount is 3,000. But if you have a repairs account, which means that you are going to add it under a repairs. Okay. Okay, let's move on to the next amount. Okay, then we have number 6. They said an amount of 500 owing by a debtor daily must be written off as irrecoverable. So in this case, we face a debtor who was not paying us. Then we decided to write off the person. So we call it a bad debt. Okay, we call it a bad debt or credit loss. Okay, so we're gonna record a bad debt, or you write it as a credit loss. Okay, we didn't have any other bad debt amount, which means that we just have to add the amount of 500. Okay, let's move on to the next one. They said create an allowance for credit loss to amount of 3,000. Okay, as I said, this amount can be expense or can be income, depending on whether it's increase or decrease. Okay, let's check. The amount that we have at the end is 3,000, but at the beginning we found that allowance for credit loss on 1 March 2018 was 2,500. Now we have to identify whether it's an expense or income. Okay, at the beginning of the year we were doubting 2,500 debtors, that these debtors, they are not going to pay us. But at the end we found that now we are doubting more than what we doubted at the beginning, which means that in our side this is a loss. Why? Because we are now doubting more people than we expected at the beginning. So we have to get the difference between 3,000 and 2.5, which is going to give us a difference of 500. Okay, in this case, of course, it's going to be expense because we are now doubting more people, which is lost to us. Okay, a provision for bad debts. Okay, 2,500 minus 3,000 is give us 500. Okay, then let's move on to the following transaction. Then an amount of 1,000 has been recovered in cash from a debtor who account has previously been written off and no entry has yet been made. Okay, in this case, a debtor that we previously written off, he come back and pay an amount of 1,000. So this one we call it bad debt recovered. We recovered a bad debt. Bad debt recovered. We have to record it under income because we receive cash of 1,000. Okay. Then from there, then number 9, they said an amount of 4,000 for water and electricity used in February 2019 has not yet been paid. So we found that there is an amount of 4,000 for water and electricity which was used in February, which has not yet been paid. So remember the principle of income statement under matching concept of gap. They say that we have to make sure that income and expenses must be recorded for 12 months. It must be recorded for 12 months, which means that now in this case, they recorded water and electricity for 11 months and they omit the amount of 4,000 because it's not yet paid. Remember, it doesn't matter whether amount has been paid or not. We have to use the principle that we call it accrual accounting, whether amount has been paid or not. As long as expense has been incurred, we have to record it and make sure that our income and expenses are recorded for 12 months. Okay, then the amount of 4,000, which means that we have to go and edit underwater and electricity so that it will be 12 months. Okay, let's check our water and electricity. We have 4,000, 40,000, which we have to add it together with 4,000 for February. 4,000. Okay, which is going to give us 44,000. Okay, then from there, we are done with all the transactions, which means that now what we have to do, we have to calculate total expense, which we are going to say 14,000 plus 28,000 plus 15,000 plus 44,000 plus 51,000 plus 30,000 plus 500 plus 500, which is going to give us a total expense of 183,000. So you have to make sure that the balance of expense is inside the bracket because it's reduce our profit. Okay, then the other income that we have is only 1,000. It's only 1,000. Okay, remember all those balances that I write, you have to write them after the line. The problem is the cell phone that I'm using. Okay, now we have to calculate our operating profit. Okay, operating profit. Okay, the formula to get operating profit, we have to say a gross profit plus other income, which means that it's 436,000 plus 1,000. Then we subtract 183, the total of expenses. Then we're gonna get operating profit of 254,000. Okay, we find that we don't have any other income on this case, but please make sure that you practice the other question paper that have other your interest income. Okay, then profit before interest expense, we say operating profit plus interest income. Then in this case we're gonna get the same amount of 254,000. Okay, then interest expense, we don't have any because they said the loan is for interest free. Okay, then profit for the year will be 254,000. Okay, that's what was needed under income statement that have a allocation mark of 24 marks. Please make sure that you show each and every calculation properly and make sure that you name each and expense accordingly, as well as the other income. So remember guys, you have to write everything because a profit for the year, even though you didn't get exactly amount with the solution, there is a principal mark that you're gonna in. As long as you write the amount, you're gonna in the principal mark. So please make sure that you write everything under income statement.